It's not every day you hear a major industrial player announce the highest quarterly order intake ever, right?
Not at all.
Well, that's exactly what Siemens Energy just did. And today we're taking a deep dive into their Q3 fiscal year 2025 earnings release that covers what, April 1st to June 30, 2025?
Yep. And our mission here really is to cut through the jargon, pull out the key financial bits, and help you get a real handle on what's driving this global energy giant.
Okay.
We'll start big picture, then kind of peel back the layers, look at the segments, see where they're shining and, where the challenges might still be.
Sounds good. And with that headline number, let's maybe start with the CEO, Christian Bruch. He sounded pretty confident.
He really did.
He said, our businesses delivered another strong quarter, continuing the solid performance of this fiscal year, and that puts them on track for their upgraded guidance, trending towards the upper end.
Right. And he also mentioned lifting the dividend ban early.
Yes, because they exited that federal bund-to-back guarantee. That feels like a pretty big signal of financial strength, doesn't it?
It absolutely is. And, what's really interesting is how that confidence connects back to that record order intake you mentioned.
The headline grabber.
Exactly. We're talking 16.6 billion in orders. Like you said, not just good. It's literally their highest quarterly intake ever.
That's huge. So what's behind that? Is it just one area or?
No, it's across the board, which is remarkable. Comparably, that's like a 64.6% jump over last year.
Wow.
And yeah, all segments chipped in. Siemens Gamesa got a special mention, though, for landing two massive offshore orders. Baltic Sea.
Okay. Offshore wind doing well there.
Definitely. And all this pushed their book-to-bill ratio to 1.70.
Meaning 1.7 euros in orders for every euro of revenue.
Exactly, which is, a really healthy sign for future work. It drove their order backlog to another record, too, 136 billion.
Okay, 136 billion backlog.
Although, worth noting, negative currency effects did shave a little off that total. Still a record, though.
Right, so those huge orders are feeding the top line then. Revenue kept growing double digits.
Yep, hit 9.7 billion. That's up 13.5% on a comparable basis. Pretty solid.
Is that kind of growth like way ahead of their competitors right now, or is the whole sector seeing this?
That kind of double-digit growth is definitely strong. I'd say it signals they're holding their own, maybe even gaining some ground in their key markets.
Okay.
But maybe even more striking is the turnaround in profit. Profit before special items jumped massively.
How much?
To 497 million. Compare that to just, 49 million same time last year?
Big difference.
Huge.
Yeah.
So the margin went from 0.6% to 5.1%, and that reflects, the higher volume, obviously, but also real operational improvements.
Operational improvements, like what sort of things are we talking about? Better execution, cost cutting?
Yeah, sort of all of the above. Better project management, maybe getting better terms on some of these new big contracts, keeping a tighter lid on costs generally. It all adds up.
Okay.
And then even when you factor in special items,
Yeah, what were those this time?
they were pretty big, 458 million, mostly linked to the demerger of the energy business from Siemens Limited in India.
Right, the India demerger. Okay.
So even with that, their net income landed at a positive 697 million.
Which is a massive swing from the loss last year.
Exactly. A net loss of 102 million back in Q3 24. So, yeah, big turnaround. Translates to earnings per share of 0.71 versus negative 0.16.
That's quite the comeback. Now, you mentioned cash flow earlier. Free cash flow pre-tax was 419 million. That's actually down from last year, isn't it?
Yeah.
727 million then. Any cause for concern there?
Not really, actually. It's pretty much what they expected.
Oh,
The
yeah.
dip was mainly down to working capital stuff at Siemens Gamesa, and also they're investing more in expansion, which, makes sense given all those orders they're winning.
So spending money to make money, basically. Investing in that growth.
Pretty much, yeah. It's tied to fulfilling that huge backlog. So not really a worry, more a sign of gearing up.
Got it. And that confidence shows in their outlook too, right? They reaffirmed the raised guidance.
They did, sticking with it and
Yeah.
still saying they're trending towards the upper end.
So that's 13 to 15% comparable revenue growth.
Yep. Profit margin before special items, 4 to 6%.
Net income up to 1 billion euros, excluding those India demerger special items.
Correct. And free cash flow pre-tax, around 4 billion for the full year.
That's a strong message to send.
It really is. So, okay, we've seen the impressive overall picture. Maybe now we should dig into the segments, see where the engines are really firing.
Absolutely. Let's peel it back. Where do you want to start? Gas services.
Sounds good. Gas services pulled in orders of 6.18 billion. That's up 21.6% comparable.
Okay.
And interestingly, about half of those orders came from the U.S.
The U.S. again.
Okay.
And revenue.
Followed suit. $3.12 billion in revenue, up 16.7% comparable, mostly driven by their new units business.
So good growth, top line. How about profit and gas services?
Also very strong. Profit before special items was $406 million. That's a sharp improvement, pushing the margin up to 13.0%.
13%, nice.
Yeah. And that was mainly higher volume and just solid operations, even with some negative hits from higher U.S. tariffs they mentioned. Seems like they're
Yeah.
managing those okay.
Good to know. Okay, next up, grid technologies. Feels super critical for, well, everything energy transition related. The plumbing.
It absolutely is.
Yeah.
The backbone.
Yeah.
And grid tech had a really strong quarter, too. Orders hit $4.22 billion,
Growth rate.
up 23.9% comparable. Big increase across both solutions and products. And guess where a lot of the demand came from?
Let me guess. The U.S.
You got it.
That ain't-
Benefiting significantly from U.S. demand again. Revenue also really robust, $2.82 billion, up nearly 26% comparable.
Wow, 26%.
Yeah, mostly from expanding their product business and just executing on those solution orders they've won. It really reinforces that North America story.
Definitely seeing a theme here. And did grid tech's profit keep pace with that revenue surge?
It sure did. Profit before special items came in at $448 million, sharply up. That gave them a really healthy margin of 15.9%.
Almost 16%. Very strong.
Very strong. And that was driven by, the usual suspects when things go right. Operational improvements, higher volume, and importantly, better margins baked into that order or backlog they're working through. They're optimizing things well.
Okay, makes sense. Let's move to transformation of industry. Sounds like this is about helping traditional industries clean up their act energy-wise.
That's a good way to put it, yeah.
Yeah.
Making industries more sustainable, more efficient. Orders here were $1.36 billion, up 23.4% comparable.
Solid growth again. What parts drove that?
It was pretty broad-based within the segment. Strong double-digit growth in electrification, automation, digitalization, also industrial steam turbines and generators, and their compression business.
Okay, and revenue.
Revenue was also $1.36 billion, interestingly. But the growth was a bit more modest, 6.1% comparable, mainly driven by compression and strong service growth in this segment.
And profitability improved here, too.
Yeah, profit before special items was $157 million. Margin improved sharply to 11.5%.
Nice jump.
Mainly better margin quality coming through from the backlog they're processing, plus that higher service volume helped too, really getting more value out of existing contracts.
Now, within that segment, there's this one bit that caught my eye. The Sustainable Energy Systems subsegment.
Ah, yeah.
Okay, get this. Orders were down massively, like 48%, but revenue shot up 55%. How does that work?
Right. It's counterintuitive at first glance.
Yeah. And the profit margin, still negative, but it got less negative. Went from minus 56.5% to minus 50.5%. What's the story there?
It's a fascinating dynamic, isn't it? What that often tells you is they're laser focused on execution right now. They're burning through their existing backlog, maybe projects that were delayed. So revenue surges as they deliver on old orders, even while new order intake dips, perhaps because they're being more selective or just focused on delivery. It's about clearing the decks, realizing cash from past wins. It's actually a necessary step often on the road back to profitability, even if the order number looks weak short term.
Okay, that makes a lot more sense. Focusing on getting stuff out the door.
Exactly. Working through what's already on the books.
Right. And speaking of complexity and maybe needing to focus, let's talk about this segment that always seems to be the big story and often the big headache, Siemens Gamesa.
You're absolutely right. Still the main event in many ways. And it's a real mixed bag this quarter.
How so?
Well, on the one hand, explosive order growth. Just massive. $4.89 billion in orders. That's up over 200% comparable.
200%. Where did that come from?
Mostly those two huge offshore wind deals we mentioned earlier in the Baltic Sea. One was $1.8 billion, the other $1.5 billion. So that's the bulk of it right there.
Huge offshore wins. Anything else notable on the order front?
Yeah, they also mentioned they started sales activities for the successor to their troubled 5.X onshore platform. The new one is the SG 7.0170. So starting to look towards the future onshore pipeline, too.
Okay, so orders look fantastic, record-breaking even. But there's always a but with Gamesa lately, isn't there? Revenue and profits still struggling.
That's the tough part, yeah. It's kind of the classic turnaround dilemma, isn't it? Big orders are great, but you have to execute profitably.
So, the numbers.
Despite those massive orders, revenue actually dipped slightly, down 0.5% comparable to $2.51 billion.
Huh. even with offshore growth.
Yeah, the growth in offshore just couldn't quite make up for a decline in onshore, partly blamed on weaker orders from the past,
Right.
legacy issues, and also a dip in the service business revenue this quarter.
Okay. And the bottom line, still red.
Still red,
Yeah.
unfortunately. Profit before special items stayed negative, around 438 million. Pretty similar to last year, actually.
No improvement there then. Why not? What's still dragging it down?
Sort of a cocktail of challenges. They flagged cost increases tied to ramping up those big offshore projects that cost money up front.
Okay.
Ongoing quality issues still plaguing the onshore side. There was a negative hit from just a standard annual update they do for statistical models for the whole wind turbine fleet, plus those U.S. tariffs again and some temporary currency hedging impacts.
So quite a few headwinds still.
Definitely. It's a segment clearly in a major transition. Huge potential with those orders, but significant operational hurdles still to overcome to get to consistent profit.
Right. Okay, so we've done the big picture, we've dug into the segments. Now let's try and connect the dots, look at some trends, maybe geography. This is where it all comes together, doesn't it?
It really is. And geographically, one region just leaps out.
The Americas.
The Americas, and specifically the U.S.
Yeah.
The numbers are staggering. Orders in the Americas overall, up 113% comparable in Q3.
Whoa.
Revenue up 44.6% in the U.S. alone. Orders up over 200%. Revenue up 61.2%.
Just incredible growth there. What's driving that? Is it specific policies like the IRA?
It seems highly likely that policy support like the Inflation Reduction Act is a major factor, yeah? Driving massive investment in the grid, in renewables, in energy infrastructure generally. And Siemens Energy is clearly right in the sweet spot to capture a lot of that business. It's undeniably a critical growth engine for them right now.
Really highlights the impact policy can have.
Yeah.
Okay, what about other parts of the world? Europe, Asia.
Bit more mixed there. Europe, CIS, Middle East, Africa, orders were up strongly, about 44% comparable, but revenue growth was much more modest, only 3.6%.
Interesting disconnect.
Yeah, and Germany specifically had a weird trend. Q3 orders up slightly, but year-to-date orders way down, like 60%. Yet year-to-date revenue was up 20%.
Suggests maybe they're working through a backlog there too.
Could be, or just different timing of big projects landing.
Yeah.
Then in Asia, Australia, orders grew 16.4% comparable, but revenue actually declined 5.3%.
Another disconnect.
China itself had strong Q3 order growth, over 43%. But again, year-to-date it was down. So it really shows they're navigating very different market conditions across the globe. Not one single story everywhere.
Fascinating. And thinking about the type of business, building new stuff versus servicing old stuff, what's the trend? New units versus service.
Good question. Generally, connecting back to the big picture, the trend seems to be really strong growth in new units across the company.
Which makes sense with the energy transition push.
Exactly. Building new wind farms, new grid connections, new efficient gas turbines. The service business results were more mixed, depending on the segment. It contributed, but less dynamically, to overall revenue growth this quarter than all those new orders coming in.
So the focus seems tilted towards building out the future infrastructure right now.
That seems to be where the big momentum is, yeah. Though obviously that service business is crucial for the long-term recurring revenue stream.
All right, you need both. Okay, so wrapping this all up, we've covered a lot of ground. What's the big takeaway from this deep dive? Feels like a pretty positive story overall.
I think so, yeah. The overall narrative is pretty clear. Siemens Energy is definitely riding a strong wave. Record orders, significantly better profit,
Driven by.
driven by really strong demand in key areas like grid and gas services, and in key regions, especially the U.S., which is just booming for them right now. And they delivered financially. Lifting that dividend ban early is a real milestone.
But we always need the nuances, right? It's not all smooth sailing.
Definitely not. You have to acknowledge the areas of focus. Siemens Gamesa is the big one. That path to consistent, profitable growth is still underway, despite those fantastic order numbers. That's the key challenge.
And managing external factors, too.
Exactly. Things like currency fluctuations, tariffs, those can always bite into the bottom line, so they need careful management.
So maybe a final thought for you, our listener. Given Siemens Energy's position right at the heart of gas, grids, wind, how do these numbers we've unpacked not just reflect the energy transition, but how might they actually shape it?
Yeah, that's a great question. And what's the next big hurdle, or maybe the next big opportunity for them as they push for what they call profitable growth through continued excellence in project execution? Something to think about.
Definitely. We hope digging into these details for one major player helps you understand the broader industry shifts and, the whole global economic picture a bit better. It's all connected.